Hey Balasubramanian, Chief Executive Officer with Birla Sun Life AMC joins us. Bala, fantastic to have you back and thank you for joining us. Bala, for the moment looks like markets have hit a pause button. There are no triggers. So do you think in the short term, in the medium term, markets are unlikely to go anywhere?
Yeah, I think, good morning, Nikunj. I think the way I think the markets have been behaving for the last 2-3 months. One, we after seeing a reasonably pull up in the overall market, and we have seen actually some bit of consolidations coming in the last few weeks. And even yesterday's policies reasonably expressed their confidence of economic growth coming back, and they also expressed their confidence the way the overall fiscal situation is shaping up, more from the point of view of government confidence of improving the fiscal numbers. These are some of the lead indicators which shows actually a sign of recovery coming back. And in that sense, I think the broad market is consolidating quite nicely at the current level. And the other biggest factor which I think all of us are keeping our fingers crossed, especially with respect to the monsoon, I think the last few weeks, I think the monsoon impact has been pretty good with respect to the quantum of rainfall. That also I think brings in some bit of optimism back to normal with respect to the agriculture sectors, and thus related impact on the inflations. In all these factors, if you see, I think clearly the market is consolidating. I think first quarter results just got to, I think it's just been coming out. I think we have seen actually mixed signals coming from different type of corporates for different purposes. In totality, if you look at it, I think we are quite in a consolidation phase. And one thing I think is clearly emerging is downside is getting limited. And then upside would depend upon how we are progressing as we move forward in the next few quarters.
When do you expect earnings to kick in? Because the rally that we've seen so far in infra and the cyclicals is pretty much pricing in an upturn in earnings. When do you see that happening? Which quarter?
I think the way we have been estimating is I think we should see actually a clear earnings pickup coming from the third quarter onwards. I think the drivers would be largely the step that is being taken by the government in the recent past, which are more of enabling in nature and giving more approvals, pushing a lot of things, especially with respect to the kickstarting the economic growth, both through the private sector and public sector participations, both in the road sectors and as well as in power sectors. And last, of course, we'll have to just see actually how the whole mining, the regulation is going to be changed, so as to ensure that the large pool of pending power projects are made up and running. And the fourth, of course, is something I think will have a more visibility coming from the respective government. I think post November, December, especially the roadmap, which I think that could evolve as we move forward. In all these sense, I think look at it, I think we should see actually the progress coming in terms of numbers in the third quarters. I think as it is, if you look at from the global economic scenario point of view, I think we are seeing actually some bit of uptick in the economic growth coming from US. There is a bit of hope that is coming back with respect to Europe. That also reflects it with respect to that exports picking up. There has been a good amount of export that has picked up in the last few quarters. All these things are, in my view, are indications of good numbers coming from corporates as we move forward. I think clearly one of the area where we have reasonably good confidence that underestimate is that there are going to be a reasonably good a handful of surprise coming on the earnings side, maybe from the third and fourth quarter onwards.
Bala, what worries me is that still there is a lot of hope. There is no evidence. And there is a very thin line between hope and evidence. Economy should come back. Economy will come back. True. Interest rates will come down. Earnings will move up. There is no real evidence of that. There is no hardcore evidence.
I think I would not fully agree with you on this, Nikunj, in terms of evidence. I think the evidence has to, of course, come in a gradual manner. Evidence, of course, will not come big time in one go. I think that, in my view, is good actually for one, getting your estimates right, and second is building your business model also right, and third is too much of optimism, so all getting delivered actually in 1 month or 2 months. It's something which is going to be dangerous, which is the pent-up demand certainly cannot, of course, create actually a huge amount of the supply and demand gap. I think the way, in my view, I think the things are shaping up. I think supply-demand gap is now gradually is getting reduced, and if you go by the sales numbers, whether it is in the car sales or in the commercial vehicle sales, or even the car sales numbers, they have been actually showing an uptick. With the good monsoons, which I think now currently we are seeing actually shaping up, potentially it will lead to actually a better agriculture output for the second crop. I think as and when it comes, the second crop is going to be much better than what is in the first crop, which again is going to be largely in the nature of uplifting the income levels of people. I think the way we see is, though a lot of expectations are getting built up, I think the best interest of economy, the best interest of companies, the best interest of investors, let there be a gradual progress, but the progress be upward territory, in the upward territory, rather than kind of volatile kind of scenario.
Bala, let's talk about defensives, and I guess for the moment that's the flavor of the moment. That is the seasonal fruit of this quarter. IT and pharma companies, IT and pharma sectors, they both have come out with good set of numbers, and these stocks have gone up. But do you think the post-earning adjustment in IT and pharma, is that over?
I think it's again, these sectors benefits largely on account of the global growth and the discretionary spending, especially with respect to the IT, which is rising globally. These are the two drivers of for the IT as a sector. And second is, I think if you look at the larger consideration and the worry that was there in general for exports, and with particular to the IT and pharma, with the rupee dollar movement. I think clearly again and again it's got re-emerged that I think we are actually going to go for a stable currency kind of environment, and despite the huge amount of flow that we have witnessed in the last few months. I think clearly the strategy has been to one side build up reserves and keep the rupee dollar parity almost stable in certain kind of band. That also has taken away the worry, which otherwise are hurting actually the expectation for these pharma and IT as a sectors. Having said that, I think these sectors, I think clearly from the portfolio manager's point of view as well as for the investor's point of view, is something has to be looked at from differently. It cannot be actually looked at more with respect to actually the overall hype that is being created actually the Indian economy as a whole. I think on the basis of the merit of the product, the merit of the balance sheet, the merit of the size of these companies in which they are operating, both the domestic as well as globally, they will continue to remain in some sense sectors which one need to either have neutral weight or marginally plus or minus about 2-3% underweight or overweight, depending upon the outlook. I think clearly these sectors throws a lot of cash. I think as a participant in the not just only domestic growth, even global growth. And third is, of course, is actually the companies are largely the shareholders friendly when it comes to the question of dividend payout as well as the earnings growth. And that's one of the reasons these companies most of the time enjoy high P multiples, but cannot be ignored given the fact they are all fundamentally strong, the business with a clear visibility for the next 5 years or 10 years in terms of the growth coming from these companies. And the re-emergence of these sectors in the recent past, I think is naturally an outcome of, I think at every point of time we have seen the market always realizes that better to have some bit of a balanced portfolio rather than taking a skewed exposure in one single sector. The point what he raised earlier, a lot of hope and optimism getting built in, is it not being getting overplayed? I think that is why I think the discipline comes into play in terms of how do you want to actually construct the portfolios with a good mix of pharma and IT, which are so-called defensive, but they are very powerful when it comes to the question of earnings outlook.
Bala, what are your contrarian ideas in this market?
I think not many in terms of contrarian ideas. I think while we of course played out quite well in participating in the cyclical sectors, which includes banking, which includes metals, which includes capital goods sectors. At the same time, we as a fund house, we always follow certain principles of in terms of the process and discipline with respect to the weightages that we need to own in the portfolios with respect to the various indices. That disciplines, in our view, has always been helping over a longer period of time in terms of ensuring not to chase one sector, not to chase one stocks. I think the overall basis, the construction of portfolios will be extremely important when it comes to the question of generating consistent return. In terms of to answer your specific questions on contrarian views, though not many are there, but we have also been reasonably bullish with respect to the metal asset sectors, especially the aluminium for quite some times, given the fact that the sector is seeing actually some bit of an uptick, both in terms of price and as well as the demand supply gap is more in favor of the manufacturers.
The market breadth today is looking okay. It's not great, but today it's the bank nifty which seems to be disturbing the market equilibrium, and that really has been the pain point. Bala, banks are always considered to be the biggest proxy to bet on an economic turnaround, but banks across the board have appreciated 40, 50, even 70% this year. Do you think now banks will consolidate, and they will consolidate till the time we don't see any evidence of green shoots of recovery?
I think it's a sector which is, of course, as you rightly put it, it's considered as a proxy to the economy. It does reflect the expectations and growth that is being built actually in the overall economic growth as we move forward. Having said that, I think the sector has got good amount of the push in the recent past. So while there is a merit for this to consolidate, at the same time, if you look at consistently, whether it is from the Reserve Bank of India or from the Government of India, there has been a high level of focus that is coming in with respect to the banking as a sector. And see to it, they are given substantial support, whether with respect to the asset reconstructions, the policies, which I think hopefully next 2-3 days we will see something coming up from RBI. And second is the NPA restructuring norms. And third, even the recent SLR reductions means that give more money in the hands of banks to go and meet actually the latent demand that could come with respect to the credit. And fourth, of course, the government reassurance that they will keep the overall stake in the public sector banks at 52%, at the same time help them actually increase the capital as and when it is ripe for them actually to go to the capital market and tap the public resources rather than the government resources, more with respect to adhere to the Basel III norms requirement and so on and so forth. And that I think is clearly an indication that the banking as a sectors will continue to remain one of the sectors, both in terms of weight as well as in terms of ownership in most of the portfolios.
Right.
I think having said that, I think it's a very clear recovery path. I think if you're able to see it, I think clearly the sectors will remain somewhat attractive for investment opportunities for longer term.